everyone. Welcome to Stock Market Today. It's Allie Corman, Ed Carson here with a look at the market action today with solid gains across the board and the NASDAQ leading the way. And Ed, we're starting to chip away at some of those key resistance hurdles. Oh, and you are on mute.
Sorry, thought I pressed it. Sorry, we saw more constructive action today. Saw some nice moves by the S&P 500. Tesla keeps on surging. Apple's hitting a trend line, and then a company called Jackson Financial broke out.
All right, well, we will take a look at all of that, but first let's break down the action in the major indexes today. So the NASDAQ composite up by about 2% by the end of the session, followed by the S&P 500 up 1.1%, the Russell 2000 up about 1% as well, and the Dow up about 0.75%, so strong gains. We got above the 14,000 level, now pretty solidly above that 50-day line as well. So it looks like the next stop is around this 14,500 level.
Yeah, and it was really nice. Yesterday's action was actually pretty constructive because, yeah, I mean, technically this closed below the 50-day line on the NASDAQ, closed above that on the S&P 500, but held basically there off lows after 4 strong days. I mean, that's all it gave up. So that was really positive. And then to come on like this, definitely positive action. So, you know, it's the kind of thing that investors should be adding to exposure. It's nice to see growth stocks coming up. I wouldn't say put all your chips into growth stocks, given, you know, with all the sector rotation, and it does look so far like a broad-based rally. But nonetheless, it's nice to see that, you know, as to see some growth names coming up.
Exactly, because two of the stocks that we're going to be talking about today, we haven't talked about on this show in a little while, Ed, and that's Tesla and Apple. So what does that say about what we're seeing underneath the surface? As you said, it appears like this is a bit more broad-based at this point.
Yeah, and there are a lot. I mean, there's like health insurers, there's energy miners. I mean, most of those weren't making big moves today, so we're looking at some tech names.
Right.
Now, to be fair, a lot of those tech names are coming off the bottom, so like really sharp drops, and so you know, so you have to keep that in mind. But still, it's you know, it's definitely a bullish mindset, more of a bullish mindset. Definitely, I mean, we keep on closing at session highs. Even yesterday, we basically closed in the upper half of the range. That's such a switch, just that alone, after closing at the lows day after day, closing strong, making advances, breaking through resistance. It's just really transformed over the past week or so.
Yeah, we're seeing exactly what we've been looking for to give us that confidence day by day. You know, not saying we're going to just kick back and relax now. There's nothing to worry about. Couldn't be further from the truth, but this does help to see those strong closes day after day like you're seeing. There is a bit of power to it, and it seems like we're continuing to see actionable opportunities with that. Let's also take a look at the S&P 500 getting above its 50-day line and the 200-day line today. Looks like it's on its way to 4,600 and its highs from February and early February, the first half of February there. Let's also take a look at the Dow Jones Industrial Average getting a little tongue-tied today. Working its way up to the 200-day line, and the Russell 2000 continuing to hold above its downward sloping 50-day line as well, Ed. And now let's take a quick look at the 10-year Treasury yield continuing to pop higher. So it seems interesting to see this trend while we're also seeing growth stocks starting to rally off lows.
Yeah, and that is something to keep in mind. That's one reason to be careful with growth stocks, especially the highly valued ones, is that sometimes they can handle higher rates until they don't. Yesterday, they were losers generally, you know, just because of with yields surging. They popped again today. I'll be honest, if the NASDAQ had been flat today, I probably would have said, well, that's not so bad given what bond yields are doing. Instead, the NASDAQ's up 2%, and some of the highly valued names really had big gains, including Tesla, but not just Tesla. So that's something to keep in mind, but it's impressive the strength we're seeing in growth despite this.
Yes. All right. Well, speaking of Tesla, let's check in on the EV car maker. A nice win streak here for the stock, looking like a bit of a character change, getting out of its doldrums. So up about 8% today, some above average turnover, like I said, adding to its win streak, a couple of high volume moves in recent days. So breaking a downtrend. I mean, the stock had not only been trending lower, but really hitting resistance at its declining 21-day line. So in the last couple of sessions, looking like it's changing its stripes.
Yeah, and it's really nice. I mean, late last week, it broke above the 200-day line and the 21-day line and the 50-day line, and those were all positive. I didn't really feel like it, broke a decisive trend line kind of thing. It didn't quite feel like there was a good entry. I mean, but if you did take it off of the 200-day or even the 50-day line, well, it's extended from that now. I mean, at that point,
Right.
it's sort of like that's gone. So if it could pause here or maybe get up
Mhm.
to a little over 1,000, which it's certainly right up there, and then form a handle, that would be really nice to see at this point, because it's still got a ways to go to before it gets up to its official buy point. But really
Mhm.
strong action. The news today really wasn't that much of a surprise. Hey, they launched, the Tesla
Right.
Berlin began deliveries, which is big news, but we sort of knew that. But the market really is, the momentum is really there on Tesla stock right now.
It sure is, and I couldn't agree with you more, Ed, about the chart action. Of course, hindsight is 2020. Maybe if you were an aggressive trader with a lot of conviction, you took the opportunity to get in or back in to this stock, or maybe even add to a longer term position here with that move above the 200-day and the 21-day line. But it's at that point, it did seem like a pretty aggressive trade because we didn't know yet if this area of the market was really going to kick into high gear yet, because it hasn't been what has worked these last couple of months.
Yeah, and remember, we have to think about, we're not trying to get the lowest price. You're trying to get a safer price, and then the odds didn't look particularly favorable with this chart. Didn't look bearish for sure, like late last week. But yeah, so yeah, as you say, hindsight 2020 looking really good now. Now, hopefully, it could pause, form another opportunity.
All right. And let's also take a look at Apple AAPL. Maybe a potentially similar scenario in that the ideal recent area to get in maybe was when it was bouncing off of the 200-day line. But again, I would say the same thing about focusing on the leading areas of the market. And at that point, it wasn't clearly known that we were going to see this big rally in the likes of Apple and Tesla. But now that we have, and now that we do see Apple above its 50-day line, let's go ahead and draw a trend line from the tops. And it looks like it maybe even barely crossed over that trend line, or is it just hitting its head against this level, Ed?
Yeah, it's right there. I mean, so I suppose if it opens with any kind of strength, you could argue, it's got a buy opportunity, got above the 50-day line. Yeah, so it has that trend line. So that could be a buying opportunity right there. I mean, it wouldn't be surprising to see this or Tesla or the market pause after having such a run, which would be
Yeah.
fine, and then move through it. But if it moves higher, that would be a buy signal. The relative strength line, while yeah, it came off highs, it's not very far from all-time
Mhm.
highs right away. So this one didn't fall that much. It was just near the end, then when things were looking really bleak. Honestly, it was just a week ago plus Monday when the
Right.
market looked terrible. So yeah, six strong days really can turn a stock around. And so we'll see how this goes, but definitely encouraging to see this gigantic company coming on.
Yeah, it is. And of course, a little handle here for both Apple and Tesla and similar looking stocks would be ideal. But that's also not to say that it's going to happen. So maybe a trend line breakout here could work. I mean, if you look at something like Eli Lilly, there's just climbing, climbing, climbing up. I thought for sure, hey, this is going to pause here and form a handle. Maybe we're starting to see a little bit of a. I guess I'll pull it up if I'm talking about it.
Sure.
Maybe we're starting to see a high handle here, but yeah, just along the right side of this base, I was, really hoping for some sort of pause. So we may not get a pause with Apple or Tesla. So even though you want something to happen, because that little shakeout of a handle is a good thing, doesn't mean we're necessarily going to get it.
Yeah, exactly.
All right, and let's take a look at a lesser known name, but if you've been following along IBD Live in the last week, we've been covering it, and that is Jackson Financial, JXN, an insurance company. It's got that RS line blue dot with its double bottom breakout today, Ed.
Yeah, and this is sort of a spin-off from Prudential Financial, so it's not like a brand new company, but it's it's into annuities and retirement. And so if they're offering like annuities, oh, we'll give this to you for 3%, well, they invest their premiums, and it's easier to make some money off of this when rates are rising, interest rates are rising. So a lot of insurance companies are doing well right now. Nice move here, nice volume. The earnings have picked up recently, so it's a strong group. Yeah, there was probably some opportunities here, that would have been, right around there for a little while. And then today broke out for sure. So a lot to like it. This is one reason. Again, don't put all your money in chips. There's actually a lot of sectors that are doing well. And so that's promising in and of itself. In many ways, it does feel like the healthiest market, not just of 2022, but for a long time, because we're actually seeing a lot of sectors participate.
Right. Well said, Ed. And yeah, maybe just it's a lesser known ticker to us out there. But when we were looking at this potential trend line breakout, I think we were saying at that point, hey, with it coming up so much on the right side of this double bottom, maybe it will pause here. And sure enough, it did for a couple of days, a little mini shakeout there before breaking out. All right. Well, that is it for today, everyone. Thank you so much for tuning in. We will, of course, be back tomorrow morning on IBD Live with more. So we do hope you join us, investors.com/IBD Live for all the details. Thanks so much, Ed. And we'll see everyone right back here tomorrow.